Hey everyone, I want to start by welcoming you all to the first video of this channel. What I'm looking to do is to break down some of the fundamental concepts of accounting and try to make them a little easier to understand. Whether you're just beginning your accounting journey or you need a small refresher, we're going to start at the ground level and build up our knowledge throughout these videos. With that being said, let's get started with the video. So for the first installment in this series, we're going to start with what is known as the accounting equation. Why do we start with the accounting equation? Well, the accounting equation is at the basis of the double entry accounting system, which is what the rest of these videos and any college accounting course revolves around. The accounting equation is as follows. Assets equal liabilities plus equity. The main point that you must remember about the accounting equation is that it always remains true. That's really important to remember, so ingrain that in your head. Assets will always equal liabilities plus equity. Now, we're not going to go too far in depth in this video about each of these elements, but I think it would be beneficial to take a look at a brief overview at this time. Starting with assets, we can think of assets as resources of a business. Typically, you might see accounts such as cash, accounts receivable, inventory, prepaid expenses, and fixed assets. On the other side of the equation, we have the obligations of the business. Another way to think of it is who has claim to our assets. With liabilities, we're talking about what we owe to creditors. So accounts you might see are accounts payable and debt. And under equity, these accounts signify what we owe to ownership of the company. So we might see common stock, additional paid-in capital, and retained earnings. And that's really all there is to it. Now, I know these might not mean a lot to you at the start, but they will be very important later on. Now, with these videos, I really want to emphasize examples. I think accounting is a subject that lends itself particularly well to teaching by example, and seeing the principles learned applied in a real-life simulation can really help to make things click. Unfortunately, with this particular topic, it's not great for examples, but we're going to try one anyway. So let's say I have cash of $20. I have accounts payable of $15. And I want to figure out what my equity should be. So very simply, we're just going to take these elements and plug them back into the accounting equation to figure out what equity should be. So we'll start with cash. Cash, as we discussed, is an asset. So on the left-hand side, I have $20. Accounts payable is a liability we owe to our creditors. So on the right-hand side, we have $15 for liabilities. And what we're trying to do is find this X, which is our equity. So very simply, if we do some basic algebra, we can see that X equals $5, or our equity equals $5. And if we double check our work, we can see $20 and 15 and 5 is 20. We have $20 equals $20. I know this is a bit of a shorter video, but it's very important nonetheless. Next video, we're going to be talking about debits and credits and booking accounting transactions. Until next time, thanks for watching.